Hi, I'm Lou from Dividend Dog, and welcome to the channel. Here we talk about stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing. So back in episode number 4, I did one on SL Green, and that got a really good reception. So I thought I would do another video on a different New York City-based landlord, different REIT. And this one here is called Empire State Realty Trust. So just to go over an overview on this, Empire State Realty Trust is a REIT. Just to go over what a REIT is, it's a real estate investment trust that owns a portfolio of New York City, mostly New York City and surrounding buildings, with some in the greater areas like Connecticut. So we'll go over it. This particular REIT, their flagship property is the world-famous Empire State Building. But REITs are companies that invest in real estate. What they do is they do not pay tax at the corporate level, but rather they distribute at least 90% of their taxable income to shareholders as dividends. These dividends are then usually taxed at a higher rate if held in a non-retirement account. For example, they're taxed as if it's ordinary or earned income tax versus qualified dividends. So I'm not a tax expert, but in general, that's the gist of it. So this company, to go over some of the history here, they trace their history back to all the way back to 1934. Their predecessor, Malkin Holdings, that was the creation of a man named Lawrence Wien. He started a real estate syndicate. The current format of the company was created for 2013. That's when they went public, and they made headlines because they owned the Empire State Building. So they combined these entities to create this company. So as of September 30th of 2022, the Empire State Realty's portfolio is comprised of 9.2 million rentable square feet of office space, 700,000 rentable square feet of retail space, and 625 residential units across 2 multifamily properties. So because of the emphasis on the Empire State Building, it's really central to understand some of the history of the Empire State Building. The Empire State Building has a long and very complicated ownership history. It's detailed fully in the book. The book's name is called Empire. It was written by Mitchell Purcell. It was published back in 2001, so I know it's a little dated, but if you're interested in just reading about all the players involved with the Empire State Building, it's a really good read. I had read it a long time ago, and for this video, what I did was I reread the book. So it goes into a few hundred pages all about all the different characters that were involved with the building. But in short, for our purposes, this goes back to 1961. Mr. Wien and Mr. Helmsley, they decided to buy the Empire State Building, but they didn't have the $65 million on their own. So they got some help by doing a couple things. Number one is they would buy the building for $65 million, but then they would go ahead and resell it to Prudential Insurance for $29 million. And then in exchange for this low price, Prudential would then lease the building to Mr. Wien and Mr. Helmsley, who would then go on to run the building as if they owned it. They got a 114-year lease on the building. Prudential already owns the lands under the building. So Mr. Wien, Mr. Helmsley, they then offered shares. They were $10,000 each, and the shares were the shares in the lease that they were getting, and that's how they raised $33 million to do this deal. That's in that book that I mentioned, Empire. If you look at pages 114 to 116, it details this complicated transaction that they did. So that's why you had these three pieces here of the Empire State Building. Number one, you had ownership of the lands under the building. You had ownership of the Empire State Building. And then third, you had ownership of the lease of the Empire State Building. And it's kind of weird to wrap your mind around, but the most valuable piece of all of this was owning that long-term lease on the building, because that's basically who controlled the building and could make money off it. So over the years, each of these traded hands. At one point, there was this Japanese billionaire, and even Donald Trump. Donald Trump basically was able to buy the building at one point. And what he was trying to do, he was trying to claim that the owner of the lease was in violation, basically saying that he had turned the building, that the people running the building had turned it into a slum. Trump figured that he could break the lease would be terminated, and then the value of the building could be realized. This part, though, from Trump's end did not work. Peter Malkin, the son-in-law of Mr. Wien, prevailed. Basically, the lease wasn't going to get broken. Eventually, Mr. Peter Malkin, who's now chairman emeritus of Empire State Realty Trust, and his son, Anthony Malkin, who's now the CEO of Empire State Realty Trust, they wanted to combine the Empire State Building with the other properties, the rest of the portfolio, and take the whole entire portfolio public. So they assembled ownership of the building and the lands to unite all three parts of the Empire State Building, and then took the whole company public. Remember, those people who bought the $10,000 shares sold back in 1961, there were about 3,000 people, and some of them didn't like these plans. They didn't like the idea of owning shares in some publicly traded company, so a few of them sued. It didn't stop the deal, but it kind of remains a bone of contention in litigation. So that's basically how it all worked here with the Empire State Building. I found the most interesting part was that, Trump was involved, and, this Japanese billionaire guy actually was the one who bought it, and he approached him, and he didn't necessarily put any of his own Trump money at stake, but he convinced them that, look, I can try to finagle this where I can break the lease, and then we'll both be much richer. It didn't work, but so a lot of very complicated history. Highly recommend reading the book if that's your kind of thing, to read up on the Empire State Building. So it makes for an interesting read, and it's just so complicated about the finances of this. So we'll go over, talk about complicated, we'll go over here about the capital structure is also quite complicated. But I'll try to do a quick review the way I just did a quick review of, a 300 and something page book. The capital structure is complicated. There's two classes of common stock. So there's the Class A, which is traded on the New York Stock Exchange under the symbol ESRT. So that's mostly what we're talking about here. There's also a Class B. It's not listed and it's not traded, but it gets 50 votes per share, the Class B. And then, to make it more complicated, there are operating partnership units. So there are 4 different series, and they're entitled to the same distribution as what Class A shares get, but they're non-voting. And the first one is called the PROP units. Those are not listed, those are not traded. And then we have three more called the Series ESOP units, and then the Series 60 OP units, and then the Series 250 OP units. So those last three are traded under New York Stock Exchange's ACA exchange. So note that while three of the operating partnership units are traded, they have these two major drawbacks that I want to discuss real quick. So number one, the first drawback of buying into one of those operating partnership units that are traded is if you look, they're much less liquid. So if you're going to buy or sell, less liquid, so they're going to be probably more volatile. Get your money in, get your money out. So that's the first disadvantage. The second, which I think is more important, which is a major disadvantage, is a tax implication. So with the operating partnership units, you get that dreaded K1 tax form at year ends. That's true of any of the operating partnership units. Now, with the case of the Class A ESRT stock, you get the regular 1099 tax form. So for me personally, this makes the Class A shares the only one that I would even consider touching. I'll focus. So really looking at the Empire State Realty, I'll focus just on talking about the Class A shares, the ESRT, and not the operating partnership units. I don't want to deal with K1s. I don't know how you other investors would look at this, but a K1 for me, it's not worth it. So I'll look at just the Class A shares for that 1099. That makes my life so much easier at tax time. So just wanted to throw that out there. Financially, looking at this, I was kind of surprised to see that, for such a kind of a high profile, it has it with the Empire State Building, there's not a lot of coverage on it. I mean, I looked, I really couldn't find much from the credit agencies, and there was really current. And it was interesting, Value Line didn't do any coverage of it. I couldn't find a report. I even looked at the small and mid-cap edition, and they didn't have any, at least that I could find. With REITs, it's the funds from operations are more practical to use as a metric than earnings per share, just because it makes the adjustments for depreciation. With real estate, that's a big deal. I really couldn't find much. I mean, on Morningstar, they talk about it and they report it, just like any other corporation. So it's still worthwhile to look at. I think the biggest issue is the dividends. The dividends, we get a sense by looking at this, what's going on here. It was 10.5 cents per share per quarter, and then it got cut completely after the June 2020 payments. The dividend was brought back in June of 2021, but at a lower rate of 3.5 cents per share per quarter. So right now it's at an annual rate of 14 cents per share per year. So even at the current price of $7.67 on November 11th, 22, that yields only about 1.8%. That's pretty low, considering it's real estate, and we got this beat down share price. That's kind of a low yield for this kind of investments. But looking at the insiders here, there's no trading in the last couple of years that I can find. So I don't see any buying, but I don't see any selling in the last 2 years. Looking at who owns it, Anthony Malkin owns a lot. He owns a lot of everything here. Mostly his ownership is in the operating partnership units, but he also owns lots of Class B stock, along with some Class A shares. but combined, it's over 12% of everything. The other owners here, they're interesting of note. This company Quark, I don't know if I'm saying it right, but Quark Holdings, they own 29.8 million Class A shares, the ESRT. So that represents 17.6% of Class A shares outstanding. And then you say, well, who is Quark Holdings? Well, the sole member behind them is the Qatar, I think I'm saying that right, Qatar Investment Authority. So that's the sovereign wealth funds. Basically, it's the country, the nation of Qatar goes around investing. I don't know a lot about Qatar. I know it's out there in like the Middle East. I don't know. Maybe they have a lot of oil money to spread around, but I don't know. Maybe Qatar, they go around the world investing, and I guess they see value in ESRT stock. And then other financial firms also have some interests here. So when we speak about this Empire State Realty Trust, what they own, what I like to do is also see, what is producing the most money for them. So on page F27 of the 2021 annual report, so it tells us that number one is the Empire State Building. It provides 31.7% of 2021 total rental revenue. So this is really not a surprise that yes, that's their flagship, quote they call their flagship property, that would produce the most money. The number two is One Grand Central that provides 12.6% of 2021 rental revenue. The third is 111 West 33rd Street, providing 11.3% of the 2021 rental revenue. Number four is 1400 Broadway, provided 8.9% of rental revenue. Number five is 250 West 57th Street, providing 5.8% of rental revenue. Number six is First Stamford Place, provides 5.2% of rental revenue. And then they go on to say no other building provides more than 5% of rental revenue. So they're also expanding into multi-family apartment buildings. They bought 2 Manhattan buildings. They're doing other things. They're selling some stuff here. This building in Norwalk, Connecticut, 383 Main Street. They basically gave that back to their lender because it wasn't producing, so they just let that go. They're selling, just recently, it was reported just selling a building in Westchester County. It was this office building they're selling for $95 million. And then also, in addition to all this, we have the Observatory. So the Observatory of the Empire State Building brings in a ton of money. It's only 2 floors. It's the 86th floor and the 102nd floor of the Empire State Building. But it brings in this big percentage of income, the actual income for the company as a whole, which I find just unbelievable. Back in 2019, it had 3.5 million visitors, and it brought in $128.8 million in revenue. And they go on to talk about it, saying that out of those visitors, 2/3 of which were international tourists. So 128 million, unbelievable. Obviously, this whole thing with COVID has hurt them to the point where in 2020, they had, 500,000 visitors. The observatory brought in 29.1 million. 2021, a little better. It was 800,000 visitors. It brought in 41.5 million in revenue. And then they upgraded the observatory. So I think in time here, the observatory will start getting back on track here with new numbers. It's nice and newly refreshed. They spent a good amount of money. So I think it's going to go back on track, making them the cash cow that it is historically. So bringing this, I think there's pros and cons here. I would say the biggest pro, we go back into the location, real estate in Manhattan. I'm going to be interested in that. They have, on top of that, with the Empire State Building is really a trophy property. So that just adds to my interest in it. I think that the real jewel in this whole portfolio is the observatory in the Empire State Building. I was reading this article in it was the Los Angeles Times back from 2013, and it's talking about how an analyst thought that the Empire State Building is worth about $2.5 billion. But it talks about how the observatory itself accounted for $1.45 billion of that total. So I don't know, maybe, what do you think? Maybe they should do a spin off the observatory into its own company or something. I don't know, crazy idea, but I don't know, or is it? Maybe it's not so crazy. But the observatory is, it's been hurt the last few years, but I think eventually it's going to get back to normal life returns. Eventually it's gonna be back on track. Another pro I would say is so ESRT, it went public back in 2013 at $13 per share. You can now buy it at $7.67 a share. You're getting in much cheaper than the offering price from 9 years ago. To me, very attractive. Another pro, I think is a pro, is that they're getting into residential buildings by buying 2 buildings. A lot of investors, it's worth knowing, didn't like this. But from my point of view, it's diversifying away just from office buildings. So I actually think it's a good thing, even though some investors saw that as not their core competency. But and I just, like I said, I think it's worth, it could be worth the bet here, where you're getting it at such a discount from its original price. There are cons, like any other, stock that we look at. First thing would be this whole work from home kind of stuff. If this keeps going, and I guess that would be a con, because most of their stuff here is office buildings. And then, the usual, well, there's interest rate risks, and depending on what the Fed does and what they do with interest rates, that could hurt. A third con, I would say, is the complicated ownership interests here. I mean, you've got the Class A shares that we, the primary means for us investors to invest in, but then you have the Class B shares, and you have all these operating partnerships. It's not a very clean ownership. It's very complicated. The Empire State Building, by being so iconic, it's kind of a double-edged thing here. I mean, anything that's so iconically American as this, I guess there could be some terrorism risk. I guess you could, they do say that they have some insurance on this, so it's not like the company hasn't thought of this. But it's just, I guess you could say it, anything that's high profile, like the Empire State Building, literally anything could be at risk. And the last con, I would think, is just the safety of their small dividends. Even though it's a small dividends, I think that it's worth noting here where they had cut it for a whole year. They brought it back. It's smaller. I don't think you can really trust the dividends here. The dividend is literally more the gravy. We're dividend investors and we want the dividends, but I just wouldn't put a whole lot of faith in the dividends on this company. So just taken all together, summary, I mean, I like the value proposition here. I mean, the real estate in Manhattan, it seems just invaluable to me. The Empire State Building, it seems good to me, especially that observatory. The revenue seems like it's over the long term. It will climb again as more and more visitors, and the thought that millions of people were going back pre-pandemic, was getting millions of visitors, and they're bringing in millions and millions of dollars, because everybody wants to go to the observatory. It's just, yeah, I mean, I'd like to get a piece of that. I think that's, yeah, it's pretty wild. So while I'm doing this research, I bought just a few shares. My cost basis is $7.54. Literally just a few shares, and I'll see what happens. And this is not financial advice. I'm just telling you what I did, and this is just my own honest opinion. But I would say that's the truth on the Empire State Realty Trust. So please, by all means, leave your comments, suggestions, thoughts about it. Thank you very much. You all have a good day. Bye-bye.